Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap for April 9th through the 13th. In this video, I'm going to try and break down some more stocks. I've been tracking a little bit more stocks, trying to get more information out during these weekly recaps about stocks that made some news this week or either moved up or down, and then we're going to be ending it with the financials that just reported some earnings. We're going to be talking about JP Morgan, Citibank, Wells Fargo, and BlackRock. While it's not a it's an asset manager. So we're going to be covering some different stocks I was keeping track of, and then ending it over on Merrill Edge, looking at some of the news I may have missed, and just we can recap end with that. So first, we're going to be started over on Facebook, covering what we released this week, and then we'll be covering the indexes, and then get into some stock news. So that's what's coming up. If you are brand new to my channel, I do make stock market, investment, and real estate videos. I would like to put out more real estate videos. I'm getting my I have a whole notepad, not a notepad, but on Google Word, I have a spreadsheet of all these ideas that I'd like to make for videos. It just, I only put out so many videos per week, about 2 to 3 different videos per week. Monday, Wednesday, and Saturday is normally my routine for putting out videos. I'm trying to create that content right now. It just takes a few days to kind of get it out. So let's go ahead and get started, and let's go. So Monday, there was some talk of North Korea and the U.S. getting together and working on some relations, and that was planned sometime around May, June. I'm not sure if that was over on Bloomberg Live or where I had picked that sort of article up, but I was reading about, just them coming together and just kind of working things out. And then we had the Syria bomb. I thought that was horrible, the Syria chemical attack. And let's see here. Budget like a boss. I got that idea for my work. I work at a credit union, so we have this whole rule that we like to tell members that they should, if you'd like to get started on budgeting, you can sit down with a financial advisor and go over this. But a lot of their rules is 15, 20, 15, 15, which is essentially 50% of your net income should go towards your essentials, such as your auto, your housing, your monthly bills, your phones. You can put your groceries into this, but groceries and clothing are sort of, groceries and clothing can, those can differ a little bit month to month. So your auto, your housing, your monthly, your bills, and your phone, those are pretty much fixed losses or liabilities. So those generally stay about the same. If your mortgage is $900 and your other bills add up to $300, that's what $1,200 of that should be $1,200 at least. That should go 50% towards those bills. So then 20% should be paying towards your future. So before you even go out there and begin eating out or worrying about what movie you're going to be seeing this weekend, 20% should be going towards your future. Either put it in against your emergency fund, your investments, your retirement, or savings. I put money into my wife's Roth IRA over on M1 Finance. I haven't been putting too much money into my Merrill Edge account. And we also have an account over at Marcus by Goldman Sachs. So that has some money in there. It's earning that 1.5% APY, annual percent yield. So we got kind of money spread around in places. So 15% then goes towards lifestyle, clothing, and groceries. I don't buy a whole lot of clothing. I get a clothing allowance from work. And my wife, they like to shop here and there. We try and not, but that's why you have that percentage allocated for there. And then groceries. Our groceries are pretty fixed per month. We spend less than $800, I think, on just food throughout the entire month. I'm not sure. Right around there, somewhere around there. And then options, eating out, entertainment. We may eat out once a week or once every other week. We may go out like on a Friday or Saturday. All the other days of the week, we're always cooking at home, so we buy a lot of the groceries. And then entertainment, we very rarely go out to see movies. With all the streaming websites that are available out there, you can find just about any sort of video or movie online. And then entertainment-wise, just board games. We do a lot of board games in the house. My kiddo, he's going on 3, and he loves to play Monopoly, the kid version with like the cat, the boat, the car. So we do that. He loves collecting money for me, and he does little chores around the house to put money in his piggy bank already. So that's really nice. Mark Zuckerberg, began to testify before the Senate. That all started on Tuesday, went on Wednesday and Thursday. Shares jumped up by more than, I believe, like 2.5% just on Tuesday alone. Continued to slowly move up a little bit more on Wednesday and Thursday. So Facebook stock ended up very positive, which we'll cover that here in just a minute. So Facebook was one of the main focuses of the media on Tuesday, Wednesday, Thursday, as Mark Zuckerberg told Congress that he personally should have done more to prevent itself and the members' data from being misused. And then, I posted something on my own social media platform just because I thought it was so funny. Being in IT and watching the the testimony and Congress question him, it was such a, it made, it brought a lot of, it was funny. That's all I can say. All my friends are in IT, and just the questions that they were asking about how they make their revenue, or, it was mind blowing. Let's see here. Pretty interesting. What is this? Oh yeah, Yahoo Live had some questions. Anybody could go live. This was a live session. They could go in there and ask questions to the two CPAs that they had provided. I know April 15th is the last day to file your taxes. That's next, or April 17th, I believe. I know it's next Tuesday. So that's also the last day to open a Roth IRA and put money into your Roth IRA or IRA for 2017. I've already done that for myself and my wife, so we're all set. So Mark Zuckerberg again over on the hot seat. He started going live over on Bloomberg, and they were showing the case in that. So I put that on there. Acorn's one of the best investments. I'm gonna go check, make sure I didn't get logged off here. Yeah, I'm still logged on. Okay, Acorns is one of the best passive investment platforms. I did make a video on Acorns on Thursday, but I mislabeled it as Stash, and I kept saying Stash, and I don't like Stash myself. You can't do the change, the roundup. Yeah, the roundup feature that's not on Stash, and they have a very limited amount of ETFs that are just renamed over standard ETFs. Their expense ratios are a little bit higher, I believe. Plus, they have that $1 monthly charge. And if you're going to get a $1 monthly charge, you may as well be using Acorns because they do allow you to do the roundup feature. They have the Found It money and a few others. So I'll be remaking that video. I think Acorns is a great platform, and they're going to be changing their policies on how they charge. JP Morgan did beat their earnings, but still fell by 2.68%. That was all Friday. So I was watching JP Morgan. I was watching Citibank and Wells Fargo, and I believe one other company released their earnings in the financial sector. But they did start off this morning. 7 out of the 11 sectors green. I guess we could check it here over on Merrill Edge. We could see how they finished off today. Yeah, so towards the end of the day, only 4 out of the 11 sectors did go positive. We need the information technology and the financials to really be a strong day in the S&P 500. So, majority of that was negative today. So not a positive moving day on Friday. And I believe we ended it with that. Of course, Wednesday I put out that video with 6 stocks with X dividends next week. We had RPM, CVS, MSM, Foot Locker, Main Street Capital, and Ford. So those were all stocks with price earnings ratios less than 25. I put that the wrong way. Yields greater than 2%, increasing revenue over the last 10 years, increasing net income, and increasing free cash flow over the last 10 years. So all great stocks to kind of take a look at. A couple of these were actually trading yield above their price, which could mean like a good indication that they could be undervalued at this time. But it's for you guys to go out there, read over their 10K, go over their quarterly reports, and just sort of decide whether it's a good or bad investment. So that is it. Now on the indexes, we had 5-day change, 1.99, basically 2% change over on the S&P 500. So overall, I believe we're moving out of that slump. For the last 4 weeks now, we have been sort of trending sideways. From going into April, we have just been in this slump right here. So I've had great buying opportunities. I actually really like this movement here because I was buying really low. I was able to get in on one of my stocks at 127.70, and I sold off at 136, and then I bought it again at 130, and then I sold off at, it just kept going nicely sideways. So That was very nice. Towards the end of the week, I didn't buy a lot this week because I was waiting for the markets to come down as it had these past times, but it didn't. So I did make a purchase on Friday and gonna hold it into next week, and we'll see what the markets do. I believe it's gonna be positive next week. I think we're out of that trending sideways slump. So that's the changes for the S&P 500, still down year to date by 0.65%. Now the Dow Jones 5-day change up 1.79, so a little bit behind the S&P 500. They did end the lowest on Friday. This was due to financials, JP Morgan and Citigroup and such, the ones essentially in here. I'm not sure if Citigroup is in here, but I know JPM should be inside the Dow 30 right there. Yeah, they did have a negative day, going down more than 2.71%. So the financials are what kind of dragged the Dow Jones. See, Goldman Sachs also fell by 1.5 almost. So financials are what dragged the Dow down on Friday, causing it to fall a little bit further down than the S&P 500. And then financials ending the week very positive at a 2.77% change. On Friday, I'm not sure a whole lot. I don't believe there were any earnings. I know Amazon, Netflix, Apple, they're all coming up in the next week or so, about 2 weeks away, and kind of scattered throughout there. So I'll be following those in the upcoming weeks. And I believe the NASDAQ, the prices are all sort of priced in already, the tax reform. So depending on earnings, you can see the stock market go up or down by 2%, I believe. And yeah, so up for the year by 2.94%. So the NASDAQ is ahead and the only one in the indexes in the green. Yeah, the Dow Jones is still down for the year by 1.45. The NASDAQ up 2.94. Now, I have been trading the NASDAQ. This is one that I've been trading myself because I think it's a little bit, it's less diversified than the S&P 500, so I could just focus on tech. So Facebook, for example, was one of those ones, and Amazon had got hit recently because of the whole, Trump Twitter attack and Facebook, just the data leak and stuff. So technology had came down very hard recently. They had actually recovered since their loss back in February for a while. You can see here that their February loss, they had recovered it all the way up, and then this caused it to fall back down. I've been buying the NASDAQ within this area just because I feel that they became, Facebook, Amazon, these have all been hit really hard, but I believe they will all jump back up here in the future. And then semiconductors and stuff with Apple going along and all the changes they have been doing, I think they'll be doing really well. So again, Facebook, we've already covered. Mark Zuckerberg going before Congress, answering other questions, and it was sort of like a little TV drama. I thought it was really interesting and made me laugh quite a bit over the questions he was asked. I'm surprised he was able to hold such a straight face. I give him props to that. And yearly change down 6.77%. I believe they're going to be recovering that over the next few months or years. They'll recover that very quickly. You can see here 5-day change up by 4.66%. So already a very nice recovery after losing more than 10% in the last 2 weeks. Next is General Motors. They enjoyed early in the week. They had a very positive note on Tuesday, up by 3.28%, and they had actually been upgraded by Morgan Stanley, and that caused their stock to kind of jump up a little bit. So the analysts were very optimistic about the company and their earnings, or their upcoming earnings and such. So I believe General Motors, that's one to look at. I know for General Motors, a lot of those are regarded as value buys because they do pay out dividends in comparison to Tesla, which doesn't pay out a dividend. Tesla's been more in the news in the hot seat recently for people talking either positively or negatively about it. Apple is up this week 3.77%. I am, disclaimer, I'm a holder of Apple myself. It's the biggest investment that I currently own within my IRA, my Roth IRA, and my cash managed account. Apple shares were higher this week. It was announced that all of its facilities worldwide are now powered by renewable energy, and this could be some of their own power plants or from buying electricity and renewable energy credits. In other words, they were just able to switch to renewable energy and get the, sort of get into the future business and such. So their shares were positive all week. That's what really helped my portfolio throughout this entire week and on Friday. That's why it ended up positive on Friday, because the majority of all my investments are Apple right now. So 5-day change up 3.77%, year to date 3.25%. We had BlackRock. I'm not sure if this one's actually held inside my wife's Roth IRA, but this is a one of the I think it is the world's largest asset manager with around $6 trillion under management. So they're a ginormous company. Nothing in comparison to some of the smaller brokers, but their earnings per share and revenue both came back well above the expectations, and shares were higher in the week by 0.93%, giving them a year-to-date change of up to 2.15%. Now, moving into the financials, 5-day change for JP Morgan. While Friday they did move down over a point and a half, prior going into their earnings, they were expected to do very nicely, which they did. JP Morgan, they reported their earnings. They came back better than expected. Earnings and revenue were both well above Wall Street's expectations, and I believe it came back around 15% higher than what they were expecting. So the CEO said that 2018 is off to a great start, but we'll just need to continue driving strong and moving forward. So 5-day change up 1.11%, year to date 3.14%. JP Morgan was one of my, I talked about JP Morgan in my very first video, Chase, and inflation and such. If you had just put your money into a stock such as JP Morgan instead of leaving it in a savings account, you would actually be pretty nice. But the next financial that released earnings this week was Citigroup. Citigroup also reported their earnings today, which came in mostly positive. The company did beat on revenue, and their earnings, their equity trading came in higher by around 35% or higher, somewhere around there. So it did beat out its peers and continues to move a little bit under the 200-day moving average, as it could be a sign of weakness to come. Right now, financials, as you saw over here on Merrill Edge, financials did move down by 1.55%, and looks like JP Morgan was downgraded recently, down from 3 stars. They were downgraded to a sell over on the 12th here. That's only one that I see here that I've only, that I've been tracking myself. So interesting. So 5-day change up 3.51%, year to date still down 4.57%. Now we're going to go into some losers I was tracking, of course, on Friday. Financials, of course, being one of them, being Wells Fargo. Wells Fargo reported earnings today, and they were sort of mixed. Again, earnings came in at around $1.12 on revenue and $1.12 per share, and then on revenue of around $21 billion. So they did miss out on wholesale banking and loan balances, which were both lower, and the shares did remain lower and moved down by 3.5% on Friday. So 5-day change down 2.57%. I had actually considered going into a financial ETF going into these earnings because I believe that they would all be positive and that would kind of move forward, but I'm pretty glad I did not go that route, and I just stuck with my technology because technology, I like tech. So that is Wells Fargo, down year to date by 16.12%. They are one of the biggest losers that I've actually been following. And then one of the stocks I was also kind of tracking, not related to financials at all, is Tupperware. And this is one I talked about a bit ago. They had gone down, I believe, 40% at one point, and I kind of brought them up. Yeah, this big chunk right here, I believe they had fell down by almost 40%, maybe it was 20%, and now they've fallen an additional 12% within 5 days. So Tupperware shares did fall on Friday as the company lowered its first quarter guidance and also lowered their earnings outlook by 5 cents and revenue by 2%. So this company is really tough to even consider. I had looked at it as a potential buy when I was looking at dividend stocks to add to my portfolio because of the yield, but the financials and the metrics did not measure out, so I skipped over this one. This was just kind of a red flag. So now moving into gold, silver, and bonds. So Gold positive by 0.84% this week. I've saw a lot of investors talking about gold kind of moving in towards commodities, or not commodities. I got a phone call. 1 second. Okay, and I'm back. So gold, ticker symbol GLD, up 0.84% this week. Had a very nice spike on Wednesday. This one has been trending up very slowly. Year to date, up 3.07%. I know gold had been talked about a little bit more from some of the investors that I talked to, friends and such. I've seen a couple people move more towards gold, more towards silver, more towards bonds, getting a little bit more diversified and not so stock heavy. I myself, and I have not invested in gold or silver and such, so no opinion there. 5-day change for silver up 1.62%. Year to date, still down a little over at 1.94%. Ticker symbol is SLV for silver if you guys are interested in checking out gold and silver. And then bonds, ticker symbol is TLT, and bonds have actually moved a little bit lower this week just because the market, I believe people are starting to feel a little bit more bullish on the market and seeing that recovery on this week. We're kind of moving out of the slump, so we're getting a lot more earnings in at the end of this week, with technology, and continue to go into that. So 5-day change over on bonds down 0.17%. Year to date change down 4.70%. So those are all the stocks that we're going to be talking about today. Now, really quickly, just kind of going over the market update. I guess this is only for Friday, but still talked a little bit about the same. JP Morgan, Wells Fargo, Citigroup. The financial sector still ended positive in the green this week just because earlier in the week they had gone up nicely due to possible earnings being positive and the stocks jumping. President Trump talking about U.S. will be striking Syrian government. Syrian kills their own people, then we go over there and kill their own people, and we're bombing the countries next to Syria. So, who's in the right, who's in the wrong. Energy sector continued to keep its losses in check on Friday. So they actually ended up positive. I saw a lot of energy sector related stocks did go positive this week that have continued to go up slowly. I know one of my old ones, Edison International, ticker symbol EIX, was pretty green this week, but I hadn't really been tracking it. Oil did continue to rally for the 5th day in a row, so that's great there. There was some mention of Delta and oil prices, and I didn't really follow along. I didn't follow that along. So, unsurprisingly, the financial sector down 1.6%, finished at the bottom of the sector standing, following a negative reaction in the bank earnings. Okay, so financials actually did end in the negative. Consumer down 0.6. Technology space down 0.3. And yep, bonds, we talked about bonds and such. So that's pretty much it. So one of the things I had seen this week, I get a lot of little notifications whenever there's certain triggers that get hit. So one of the things I like to do is go over to my technical analysis tool, go to my technical insights, and then in here, if I want to follow along on, say, an index here, such as the S&P 500, I can type in there the ticker symbol VO, go into the short term here, and zoom in to just the last 2 weeks or so, and seeing kind of like the trend lines here. So it looks like we're going over, and we've had a lot more bullish than bearish movements. So we were trending right around the 200-day moving average, but we've been kind of crossing it. So here, the last thing here that just changed today was that the price is generally in an established trend, bullish or bearish, for the time horizon represented by the moving average periods. Moving averages are used to smooth out the volatility or noise in the price series to make it easier to discover the underlying trend by plotting. I'm going to try and zoom in there. There we are. By plotting the average price over the last several bars, the line is less jerky than plotting the actual prices in the triple cross. Okay, yeah. So basically, it's just kind of it's mentioning that it's it's smoothing out now. We're not going into so many rocky up and downs. I believe going forward, I think we're going to see some movement back towards up. Not as far as we were, but we're going to see some sort of movement. There's 6 bullish and 4 bearish movements here. Now the I've been following along more on the NASDAQ, just buying and selling within the tech sector. So over, it's very similar to the S&P 500, just a lot of, I don't know where I'd start. Okay, yeah, so very similar things, lots of bullish related things here. On March 23rd, this was actual several weeks ago. This is where I was buying all my tech stocks in here, and I was really liking this volatility. It would go down very heavy on one day. I'd buy at what would be almost the low, and then I would sell it at near tops, and that was very enjoyable for quite a while. But going into this last week here, we had what 4 days almost in the pot, in the green. So we are looking. Oh, this is actually. Oh, this is over. Let's see. What's today? We're on the 6th, I believe. Today's the 13th, but the 9th. So if we just look at the 9th here. Okay, that is an adjust. So this had 7 bullish and 9 bearish over on the NASDAQ. So that's basically it for this week. I did want to just cover some of the stocks I was tracking. Of course, the financial earnings coming out on Friday. So hopefully that was enjoyable to kind of go over and talk to. And if you did not, hear about anything, hopefully I was able to give you some insights, kind of going into what had happened on the market this week. So again, I want to thank everyone for watching up until this point. If you did like the video, hit the like button below. Remember to subscribe for future financial videos. Hit the notification button because I put out content weekly. As a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion, entertainment, and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them, discussing a couple trends and stocks, and of course, thank you guys for tuning in. I will see you next time. Have a great day. Bye.